Welcome back to the show, Bob.
Thanks so much for having me. Exciting times we live in these days.
Absolutely. Last time I had you on, it was right before the election, I think. Yeah, right before the election, the day before the election, in fact. And we were talking about the outcome of the election and how it could impact markets. Well, let's take a look at how the markets have performed since November 7th. Take a look at my screen here. This is the S&P 500. And as you can see, it's been topping. It's been choppy sideways ever since the beginning of the year. And actually, if you discount this big drop in the beginning of January. It's just been trading range bound and consolidating sideways. Is this the top for you or for investors? But is this the top for markets, Bob? And then we'll get into some of the macro drivers here.
Well, I think particularly when it comes to stocks, there's a great deal of euphoric expectations built in, leading up to the election and just afterwards. And I think what's happened over the last couple of months, which is, basically stocks are flat for the last couple of months, is that investors are just trying to digest whether the actual policies that they're seeing align with such high growth expectations in the economy. And, so far, it doesn't necessarily look like that's going to be the case. So while the economy's kind of chugging along, doing pretty well on a backward looking basis, I think the real question is, are fiscal policies really going to be, are they going to be as pro business and pro growth as many people had hoped for?